Thanks for tuning in to this broadcast of The Resilient Advisor. My name is Jay Coulter, and joining me today is my regular guest and friend, Chris Versace, the Chief Investment Officer of Tematica Research, industry expert on earnings, macroeconomic outlooks, and obscure references from 80s and 90s movies. Chris, thanks for coming back on the show.
Jay, we didn't do this last week, and I feel it's been like forever since we talked. I don't. It's like something's missing, something's lacking. I'm wanting. I can't really put my finger on it.
Yes. And in this pandemic era of work from home, we've got an extra challenge this week. I have a neighbor to the left of me putting a new roof on their house. I apologize if you hear any of the nail guns coming through. And I know that I have a neighbor across the street that's building a whole addition to their house in a month. So we're going to start playing with audio.
Well, Jay, that just says as a anecdotal data point that the economy in Georgia is doing well.
The economy in Georgia is open. We're going to have to see if it's doing well over time. How about that?
Fair enough.
All right. So there have been some changes to the software that I use to create these broadcasts. So we are live on Facebook, Twitter, YouTube, LinkedIn. Now, on LinkedIn, you can now ask questions live and in real time. You were always able to do it on Twitter and Facebook. So if you're watching this live on LinkedIn, feel free to submit your questions. Apparently, they come through this software. Chris, isn't technology amazing?
It is. I can't promise my technology will be working when it's time for an answer to any questions we might get. But yes, it is amazing what technology can do.
All right, let's start.
Especially with certain Bluetooth-enabled devices that can work around the world. Simply amazing.
Really is. Let's start with the economic data for the week. So,
sure.
Short week, 4 days. What are you thinking? What are you seeing? What are you paying attention to?
Well, I'm consulting my handy-dandy little notes here that I have, and I would say there's a number of different data points we're going to get. I think the key, when we look at all the data points, some of it's going to be housing focused, some of it's going to be personal income and spending, which for April, which I actually think is probably going to be the most important data point for the week. Remember, we've got 35, 36, 37 million people that have filed fresh unemployment claims over the last several weeks. We've heard stories about rent payments being missed, credit cards, being used heavily to help people bridge the gap. So from my perspective, the twofold pieces are going to be, are they spending? Where are they spending? And the second part is, what are incomes actually looking like? Those income trends, as well as savings, can tell us whether or not we might see a pickup in spending later as the economy starts to open. So that, to me, again, that's going to be the biggest economic report that people are going to watch. But as I said, we've got a couple different ones. We've got April new home sales. We've got May consumer confidence, April pending home sales. And of course, we've got the usual weekly riffraff of stuff, jobless claims, oil inventories, natural gas inventories, that sort of stuff. But again, context and perspective, during the week, we will get the second print for March quarter GDP. I don't think it's going to change all that much. I think candidly, it's going to serve as a reference point for the GDP print for this quarter, which of course we won't get until early July. But you, me, listeners, investors, they are going to be checking each week to see how the data that we get impacts the Atlanta Fed GDP now forecast for the current quarter, which as of Friday was down 40% for the current quarter. And then the New York Fed nowcasting report was down a far, far tamer 31% for the current quarter. So I would caution everybody in saying, look, we know that the full month of April and the full month of May being shut for the most part will have far greater negative impact to June quarter GDP than the 3 weeks that we saw in the March quarter that came in the last 3 weeks of March. Say that again twice, Chris. I don't think you can. So the point being is that we know the economic data is going to be bad. We're looking for signs that things are starting to pick up, as Jay was saying earlier with his neighborhood, that it is open for business. And I think when we take a look at what's happening in the stock market, which today, Jay, is, as we're taping this, it's up, I think, the Dow's up something like 600 points, something crazy like that.
Yeah, makes perfect sense. Hey, Chris, we're actually crossing the 250-day or the 200-day moving average. So for those models that have to punch back in on a simple moving average, they're dumping back in if it's today or at the end of the month.
That's right. That's exactly right, which means you're going to have more money coming in. But let's just put some quick context around that, Jay. So in the first quarter, right, the S&P 500 lost 20%. 20%. In April, it clawed back just under 13%. And before this morning, May was up just about a little over, 5.5% or so. So we've seen a huge swing back in the marketplace. And, we have talked about this. You've talked about this with others, including my partner, Lenore Hawkins, that, fiscal stimulus, monetary stimulus has been there. The notion that we're getting dates of phased reopenings, not just in Georgia, but in other markets as well, other states as well, other countries as well. That is kind of giving rise to a new level of optimism that the worst is behind us. And we're getting more reports of potential progress on vaccines for the virus. And that is also pushing us forward. So those are all good things, Jay.
So Chris, I don't get excited about vaccines because there's never been a vaccine for a SARS virus. So to me, that's just market noise, and which focuses me more towards the price.
We have a word for that. We have a word for that, Jay.
What's that, Chris?
Hopium.
Hopium. There you go. Hopium. So, but I try to stay away from the negative news if I can, or just I try to keep focusing on it. That GDP print is going to be awful. Look at the Schiller index. And what I've noticed anecdotally here in Georgia is houses are getting sold before they even get to the market still. People from the Northeast, listen to this, Chris. People from the Northeast are buying homes in Georgia now, sight unseen, because they're trying to flee states where they aren't as open. You can't find a house to buy in the suburbs of Atlanta right now at a reasonable price. What do you make of that?
Well, a couple of things. Redfin, they came out with some data points that said that there was very little, in April for stuff coming on the market, and they were housing, and they saw things just competitive bids up the yin yang. And that's continued into May, although they've seen the supply of housing come back on. But, I think you're correct, Jay. There's a lot of articles about people looking to flee cities and head back to the suburbs. I also think when you take a look at the vacation data, right? Not so much for cruises, not so much for airlines, but rental properties, as well as car reservations. So rental car reservations have been booming. What does it say, right? I don't want to be in crowds, right? I want to be off somewhere a little more secluded, if you will, somewhere where I can control my mode of transportation, who's in the car, not in the car, in the bus, airplane, whatever, what have you, with me. So I think that's going to be pretty interesting. And I wouldn't be surprised if we see more of those data points emerge as we go through the summer. Because we're only now just coming out of the Memorial Day weekend, which we both know is like the official kickoff of summer.
Yeah. And so as someone who tries to focus just on the data now, in the state of Georgia, only one person died 3 days ago. The trend has been on a sharp downturn. And hear me out on this. So I think it's great. The moving average is down to single digits, which is great. And regardless of whether you see a lot of news about that, here's what I saw this weekend in Georgia. So I got in my car to drive around just to see what type of precautions folks were still taking. So my son plays youth baseball, and in the youth baseball circles here in Georgia, you still can't play organized events. I drove around a downtown suburban area called Roswell, where they have this strip of restaurants in a pretty affluent area. It was like spring break, Chris. People were out everywhere, not a lot of masks except for the restaurant folks. My wife and I went out to eat. We were going to eat there. We went out to eat for the first time in 3 months. And we sat down.
How was that?
In Marietta. And it was different, right? My wife was glad just not to be cooking. She's the cook in the house. She does a great job, but she was glad to not do it. We didn't bring our kids because we wanted to see what the experience was like. Everybody had masks on. The food was good. There was a lot of space between the tables. It was a place we had eaten on a regular basis, called Chicago's, if you're familiar with the Marietta area. But the atmosphere was different. And there weren't a lot of people in there. So you think contrasting a couple of different areas. So generally older people would eat at this particular restaurant versus the first place I mentioned, which is more of the middle-aged crowd that, have probably younger kids, but they were out. And then I look at scenes, what we saw up in your neck of the woods, in the Maryland area. The beaches and boardwalks were packed, aren't they? What did you notice out in your area?
Uh, I was doing a lot of yard work and taking it easy, so I can't really say that I ventured out. I did have to get in the car. Home Depot was almost at capacity at one point. I think they were letting 200 people in. I think as I walked out, I was, number 175 or something like that. But no lines to get in, at least when I went. I saw, traffic has picked up a little bit. But we're still not, we aren't even in phase one yet up here in Northern Virginia. So, but I did see a number of articles like you talked about where the beaches were full. I think people were, mentally tired. I'm done with this. I need to get outside. I need to do something. But I also saw reports where they were starting to turn people away from beaches, where they were closing bridges and causeways that would allow people to get there. And we'll see, Jay. The data that you're talking about in Georgia actually gives me some hopium, to go back to that word, because you guys opened up. I think you've been open almost a month now, right?
I believe so. Yeah.
And I don't believe you've seen a noticeable uptick in the number of cases, which again gives us hope here. But I also think, though, that the behavior you're describing, the cautious behavior from some folks, maybe not everybody, I think that helps explain why maybe the expected resurgence has yet to materialize, if it does at all.
Yeah, that's right. Let's move back into what we normally talk about, Chris. Let's talk about pain. Retail pain. So I mentioned these restaurants were open. My wife and I went to one for the first time. The retail stores that were around, still not open. So I'm only speaking about small businesses in my area. Let's go to the public markets. What are you seeing?
Well, hang on a second. So let's just get this point of clarification. So Georgia had reopened about a month ago, but retailers are not open for people going in. Are they doing curbside? Are they fulfilling mobile orders, digital orders? What's going on?
Yeah. Yes to all that except the national brands. So some of the national stores that have retail locations, thinking like strip malls, those weren't open.
Okay. And are you able to go into a Starbucks and sit down?
I do not know the answer to that question.
Okay. Because I know where we are, we can't. But if we look around in other parts of the country, like Florida, for example, Disney has talked about the phased reopening of what it's going to do. McDonald's has published something like a 56-page PDF on what their restaurants need to do to open their dining rooms. Starbucks is talking about a phased reopen. But at the same time, stores are talking about, no longer doing sit-down service and doing more pop-up shops. So to me, it's going to be a very interesting time in retail. But of course, the retail pain you're talking about stems from, I think since we talked last year, we got the April retail sales report, which, as we know, was ugly with a capital U, really, other than two things. One was grocery, which you would expect because people are eating at home in far greater fashion than they have in some time. And then the second is non-store retailing, which is the Commerce Code buzzword for digital shopping, whether it's online or mobile. And that, of course, just continues to crush it. And we hear from more and more companies that, like Hibbett Sports this morning, that reported their same-store stores for the sporting goods company demolished during the quarter, but huge uptake in digital shopping. We've heard that from Target. We've heard that from a variety of others. So the retail pain is really suffering from people not going anywhere, people not wanting to go anywhere, and the inability of stores to reopen. And this is going to make the June data, I think, a little more interesting as these phased openings happen. Again, in certain parts of the country, late April, increasingly in May, and hopefully in early June. So that's what we'll be looking for, is the snapback. But Jay, you mentioned pain. There's two types of pain there. One, if you're a REIT that happens to own or account, a lot of retail exposure, restaurant exposure, you're hurting because you're seeing a growing number of companies ask for rent assistance. And these are not small mom and pop companies. This is like, Cheesecake Factory, Starbucks, Chipotle, and the like. So, if you're owning a REIT, which a lot of investors love because the dividend income, I totally understand. I think you need to double check what is the investment portfolio that your particular REIT has. There's some that do industrial properties. There's some that do mixed use. There's some that do shopping centers, and there's some that focus on malls. So, as a message to your listeners, you really need to understand which REITs you're invested in and what their constituent portfolio looks like. So that's the first part of pain.
So
the second part is.
Oh, I'm sorry. Go ahead.
No, go right ahead. Go right ahead.
Please.
Okay, if you insist. The second part of pain, though, is just think about what I said. If we're seeing retailers that are asking for assistance, it means that they are most likely cutting back on their expansion plans. They are trying to preserve capital and cash when and where they can, so their businesses can remain alive. That also means problems for dividends. And we've seen a growing number of companies throughout the pandemic cut their dividends. But now that we're getting a sea of retail earnings, we're seeing some dividends get cut from retailers. And some examples of that include Abercrombie and Fitch, Foot Locker, and Ross Stores. And Ross Stores, ticker symbol ROST, is kind of an interesting story because they were only recently named to the S&P 500 Dividend Aristocrats. And for your listeners that don't know what that is, it's a list of companies that are A, S&P 500 constituents, and then 2, have increased their dividends every year consecutively for 25 years. So no missed dividends, no nothing. So one of the questions, just to pull it in as we're talking about these, is, Ross Stores is not the only aristocrat to suspend its dividend. So it's going to be very interesting to see how Standard & Poor's treats these dividend suspensions with regard to the dividend aristocrats, the dividend kings, and others inside that dividend family of indices that they have. Something to watch for.
Yeah, I did not realize that there were multiple companies right now in the aristocrats that had cut. I would love to get my hands on that data. So another chart that you had thrown over for this broadcast was Foot Locker. And I find it curious how beat up they are. And here's why. I've read that retail bike sales, meaning bicycle sales, are up. People are exercising from home, and those shoes, they wear out. Why do you think Foot Locker is under such pressure?
Well, I think a couple things. If you look at where its stores are based, it's got a heavy Northeast presence. So I think that's part of it, with those stores being shut down. You would say, well, okay, that's fine. But, I order shoes online, which I do. I bet you do too. Why not go through Foot Locker? There's a number of alternatives, including Zappos and others out there. But here's the thing. No sports.
Oh, yeah, that's right.
Right? No sports. So the NBA is only now talking with Walt Disney, this has been speculated for a little bit, to resuming the NBA season a little later in the summer. Down at Walt Disney World, this huge complex where they would, play games, train, and do everything. So we'll see. I think we could also take a look at comments out of Nike, off Under Armour, Adidas too, about the tone of their business. And I think it helps inform why we've seen the pressure in Foot Locker. And again, this company also suspended its dividend. And Jay, that when a company instills a dividend, the investor perspective is this dividend is going to go for some time, right? That's not what the language that a company uses states, but that's the perception of investors. So I do think some of this late drop, this big jump that you saw of late could have been that pain. But on the other hand, as we get comfortable that the people are reopening, malls might be reopening, we could see this stock really catch some wind as sports come back. So I think it'll be an interesting one to watch.
All right, so let's look at Abercrombie and Fitch, down 50% over the previous year. What's your take on this?
I would say retail is dead. Now, if you look at where it really got hit, right? It's no surprise, the vector, the velocity in that chart really from late March on. And I think that it's simply hit with the fact that people are not out shopping. I think with the layoffs that we've had, I think a lot of discretionary purchasing has gone to the wayside. That might also help explain Foot Locker a little more as well. But again, when we get Friday's personal income and spending report, I suspect we'll see savings up, and it could mean that we see some pronounced spending, later in the summer and the all-important back-to-school shopping season.
Now that I cut you out of the stream. That was a rookie move.
You didn't
for a
Jay,
live
Jay,
broadcast.
if you don't like what I have to say, you could just say so.
Wow, that was uncool. So as we get to the end of this broadcast, we talked about the earnings that we've seen. We talked about some of the data that's coming out this week. But of the earnings reports that are coming out this week, are there any in particular that you're paying attention to?
Oh, goodness gracious. Yes. I mean, we have another round of retail, and I'm just going to fire them off, and we can talk a little bit about some of them. So Canadian Goose, the high-end retailer, Capri Holdings, also high-end, Ralph Lauren, again on the high end. So those will be ones to watch. Abercrombie, who just cut their dividend, they're also going to report the quarter, as will Burlington Stores and Dollar General. The other big ones to watch for me, though, Costco Wholesale, which I think is going to continue to be a wallet share gainer throughout this. And then the one company, and we've talked about this one in the past, is GameStop. This will be interesting. And I understand that gaming is up significantly during the pandemic. I don't think console sales are. They might have seen some pull forward very early on, just like Best Buy did with their business, because people realized I'm going to be home for a period of time.
Yep.
I need people to do things, get away from me while I work, that sort of thing. Kidding, but I think you catch my drift. But here's the thing. Last week, Amazon announced its first big gaming title. And there's another one to follow, I think, in about another month. To me, this is going to serve as a sign of the shift towards gaming, not towards consoles, but more towards online and mobile gaming that we've been seeing. So this is going to be something to watch, and I just have a rule of thumb, and I'll rattle off a few companies that set the stage for this rule. Okay. Blockbuster Video, Barnes and Noble, and I'm trying to think, and Best Buy. Okay. Mm-hmm. All three of them, in my experience, went from having what you were going to the store for, renting videos, getting books, and electronics, to all of a sudden at checkout, it is what I call the shakedown attempt, right? Little gadgets, notebooks, games, candy,
the impulse
right?
buy.
Soda, the impulse buy. But it's all to grab the incremental purchase. They didn't do that when their businesses were really humming in the past, right? Because customers were coming in and getting out. So it's an attempt to nick you one last time. Desperate times, desperate measures is what I call it. In GameStop, if you go in there now, they have all sorts of stuff, even comic books. So I'm not really sure, Funko dolls or those Funko pop-up things. So all sorts of stuff that is not, in my view, in line with the core business of gaming. There might be some argument that, they're trying to capture some incremental sales with brands or titles or something like that. Okay. But I think they're doing that, again, more out of desperation. So this will be one to really watch for.
So, Chris, this is just anecdotal. I have a 13-year-old, and so we were a lot more lenient on the amount of video game time that he had during the pandemic and the lockdown. Our rule before was no electronic devices during the week. It's academics. And then you have sports on the weekends and some video games, and we loosened that. And so him and all his little friends, they started playing a lot. Asking them, just out of curiosity, what they think it's going to be like when this is lifted, if things open up more. They're sick of playing video games.
Good.
They are tired of it. I still think that's going to happen to Netflix as well. I have to drudge through old shows to go find for my wife and I. We're not going to do it when this is over. Now, I don't know if we canceled the subscription to a point you made a couple of episodes ago that we did.
Right.
But I think
the usage will decline.
Yeah. These stay-at-home services, I think, are going to have, as much as they benefited from the lockdown, I think they're going to have a pretty sharp adverse impact on the other side. But that's just my subjective guess, and I don't like predicting.
Well, Jay, before we got started, I was chatting with you about, kind of being out of stuff to watch. And I actually had to go back to the 70s to get a hopeful post-pandemic inspiration film, which was the Clint Eastwood Escape from Alcatraz, because I'm trying to escape the pandemic. So I was looking for any way to get out, Jay.
Yeah. Yep. Chris, great reference right there at the end. While it wasn't a line from it, great movie reference, because that is one of the best. I actually yesterday, sitting on the couch after a cookout, came across The Good, the Bad, and the Ugly. Clint Eastwood was quite the actor back in his day.
Yes, he was. He was. So I will tease that I've abandoned Netflix for this next thing to watch. I'm going to Hulu. I'm going into the archives to see my old friend, Veronica Mars. You don't know who that is, do you?
I don't know who Veronica is.
All right. Well, it's something to talk about next time, Jay.
Awesome. Chris, thanks
Do
so
your
much
diligence.
for coming on.
All right. Anytime, Jay. Thank you.